They're updating your room. Join permissions. All right. Well, that's weird. Never had issues with it before. Well, let's just do this. Yeah. And that. And I'll just watch it from my phone. And I'll mute my phone. All right. This will be interesting.
Yeah.
Can you hear me? All right.
Yes.
Yeah, normally it's just like scrolling on the screen and I can see it and I read everything off. What's up, Justin? All right, people are waiting, so we already got 16 people on. So guys, bear with us. Davie and I can hear each other fine. We can see each other fine. I can see there's 17 people watching right now. The issue we're having is, people are messaging me on Facebook. They're like, "Can I text him?" I'm like, "Wait, what?"
Yeah, that's funny.
I want to text.
Sure.
We'll get to that point later in the interview. You guys know
Absolutely.
how we do it. You guys get to listen to all of my hot air for like 15 or 20 minutes, and then we'll do the giveaways.
Yeah, of course. Right. Yeah.
So the cool thing about this being, the fourth largest city in the nation, Houston, is there's a lot of everything. But for those that have maybe not caught that, we were looking for a CPA when we started our company because we knew that we needed somebody that knew what they were doing and that would really help us out. And it's like we had people that my dad referenced somebody. He's done business with lots. He's an awesome, but he's done business with people down here. My mom lived in Houston for 5 years, referenced somebody, and no knocks on anybody. We just didn't feel they were a good fit. And then just the way that we talked to you. You took care of us this last year. It was really cool. The IRS sent us a letter. It was just like a request for more information.
Yeah.
And you took care of it. It was like the most stress-free thing ever, because like I'm getting hammered. All of my partners are gone. And like it's just a holy roll and nightmare of like I'm washing all day and I'm trying to handle all this stuff. And it's like, you're just like, this is not a problem. This is easy. Yeah. So I can say that like our interaction has been really, really like low stress and very simple. And I was actually telling another company today about you. You're just like in passing. I was like, oh man, my CPA, like he's the dude. This is how it all worked for us. It was super easy. And so
I certainly appreciate that. I mean, the main, I know that. So I'm full disclosure, I'm 36. So I'm like in between like the most modern generation, like the Zoomers, but I'm more modern than like, let's say, baby boomers, right? So I know that most people don't want to go into an office anymore. They want to have like sort of a smooth interface, and so I just aim to make that as to make the sort of the transition between like any kind of consultation and then the actual work as smooth as possible. And I do that just through. You can text me, you can call me, you can email me, and I'm basically open, 24 hours a day, because I understand too that most people don't have, especially when you own your own business, you don't have a 9 to 5. It's basically whenever you have to do the work, you have to do it. And so you have to also, you have to shoehorn in a lot of stuff at times when maybe people that had like, let's say, a more brick and mortar type idea of a business, they wouldn't want to talk to you. But I'm pretty much willing to just communicate just when need be. So
no, Johnny, he doesn't do my insurance, but I mean that'd be a good gig if he's CPA insurance, like he's a one-stop shop.
Yeah.
I'm looking at the questions. Alan Smith, what's up, buddy? Xavier, Frankie, Cullen, appreciate you guys dropping in. David Bender, off topic, but you want to upgrade your 3/4 inch hose from 5/8 hook up spigot directly to the pressure washer. Can you get a 3/4 an expandable hose or go with Flexzilla? I would not use an expandable hose. I would go with Flexzilla. That's what I use. I like it. I use 3/4 inch. It's getting hard to find, so if you can get some, go ahead and get it. So sorry to jump off topic.
No, sure.
What's a CPA? Good question.
Yeah. So okay, I'll just say full disclosure, right? So a CPA is a certified public accountant, right? And I'm a tax attorney. So we both handle pretty much. We have exactly the same province. the way I look at it is taxes are laws, right? They have to be followed. When you form a business and you're in business and you earn revenue and profit, you have to pay taxes, both state and federal. And so a CPA is a certified public accountant, which means that they can wear several hats. They can do bookkeeping, they can file federal tax returns, they can do payroll taxes and things like that. A tax attorney has exactly the same province. I would say that there's more emphasis on, like, let's say, the enforcement, like, representation with the tax attorney. So that means that if the IRS sends you a letter saying, hey, like, we think what you've done is incorrect, then you most likely would go to an attorney. But the way I look at it is I also focus on compliance a lot. In fact, that's mainly my business. So I prepare federal income taxes, state income taxes. So they're more or less exactly the same thing. But again, full disclosure, I'm not a CPA, but I am a tax attorney. So I passed the bar, the state bar, state of Texas bar, and I'm licensed to practice law in the entire state of Texas. So
that's awesome. Yeah, a lot of people, when I was saying, hey, I'm going to talk to a tax guy, they're like, it's only in Texas. I'm like, yeah, most guys are not geared up for multi-state stuff.
I will say this, though. I actually have a lot of clients out of state as well, and I can also comply with whatever sort of their needs are as well. Yeah. The federal law applies to everyone.
Everything, yeah. But I think most guys were like, well, I'm in Georgia. What about Georgia state taxes? I'm like, I can't speak for him. You have to ask my guy.
I can say that, like, with certainty, that there are certain kind of tax structures that each state sets up that are almost identical. Right now, there'll be little things that differ. Like, so the biggest examples of those are that Texas has a franchise tax and it also has sales tax. Meaning, if you start a company that has liability protection, such as an LLC or an S corporation, the state is actually conveying liability protection onto you. And so as a result, most likely the state requires you to file a tax return. In Texas, it's called the franchise tax return. But in other states, I'm sure they have it as well. And Georgia would be no different. And then every state has sales tax. I don't know any state that's completely exempt from sales tax. There probably is one or two, potentially.
It depends. So I think that there are some guys that pressure washing is not a taxable service in some states.
I'm sure that's true. I'm sure
it is here. You know, like when you sent me the code, I knew that before we talked. Mm-hmm. Like that's why I had my sales tax ID, because I talked to the tax comptroller to make sure. And then he was really helpful. Like the guy I talked to, he was like, "Here, Google this. It's on this page. Here's the actual." And it's cool because I know how to find it. And I've had customers that were like, "Why are you charging me tax?" I'm like, "Well, I have to."
Yeah,
and they're like, "What do you mean you have to?" I'm like, "Well, it's the law, dude. Sorry."
Yeah.
I'm a legit company. I have insurance. I pay taxes.
Oh, sure. Of course, right. And I will say this, in terms of enforcement, the state of Texas really does monitor sales tax. And I would assume that other states that also charge sales tax, that's a tax they're very serious about. I mean, so that would be something you certainly want to comply with. Now, and also you most likely have to disclose to clients and customers that you're charging them a tax. You can't just, like, let's say, just roll that into the bill and then just pay it yourself. There's like a degree of dishonesty there. So when
my invoice says sales tax.
Yeah, absolutely, and that would be the way I would recommend doing it as well.
Like the nice thing is the CRM I use, Marquette, is straight up like an add-on, and now there's a couple times because you have to check it and add it to your items, which I wish that it would just auto-fill. Like everything I do has taxes. Now, when I very first got started, I forgot a couple times, and you didn't pay the taxes, So I reported it, paid the taxes because I just didn't charge them. So they got an 8.25% discount.
yeah, exactly right. And
I don't do them anymore. Like I've done it like twice. It's enough to like where I was like, nope, done with that.
Yeah, you learn your lesson very quickly if you have to charge sales tax and you don't do it. So I mean, I can go into some sort of general questions that a lot of people have, let's say, about taxes. If there's no specific questions right now, or
no, let's start to. I'm watching the comments. I don't see anything right now. Sure. So you sent me a list of stuff that you were going to talk about, which is great, and let's
Yeah, we can
Let's
just
go
go down
through it.
that until somebody has a question, and then I don't mind stopping to answer it. So the main thing I would say about you want to structure your company in a way that you can most easily handle the taxes, even if you farm them out, if you farm out the work to other people. You don't want to be, let's say, ignorant to your tax structure again, even if you don't do it. So
You don't
that
want to
also,
Wesley Snipes sit it out in prison.
yeah, yeah, exactly right. You don't want any willful ignorance. So that starts with the company formation, right? So the form of the company that you start is important. So that would be things like a sole proprietorship or an LLC or just a general partnership or an S corporation or a regular C corporation.
So because you're talking about that, that's a question that just popped up. It says,
Sure.
what do you recommend for a new company? LLC, incorporated S corp, etc.
Yes. Okay. So the most flexible and easy to deal with is an LLC, whether it's just a single member LLC or whether it has multiple members. But all of the income, all of the profit associated with an LLC, whether it's a single member LLC or whether it's a multi-member LLC, all of that profit is subject essentially to the income tax and then payroll tax, right? So that's Social Security and Medicare. It's easier to administer than an S corporation. The benefit of an S corporation is that you can have, let's say, silent shareholders who don't work in the company, and their income is passive, and therefore their income would only be subject to income tax and not Social Security and Medicare. Whereas with things like an LLC, it's not always the case, but it's harder to make the claim that there are passive members of an LLC. You can do it, it's possible, but with an S corporation, that was really the purpose of the legal formation to begin with. The S just stands for small. There can only be 100 shareholders in an S corporation. Again, there can be silent partners in an LLC, but it's much easier to make the claim if they're just a shareholder in an S corporation.
Yep.
The problem with an S corporation is that the active participants in the corporation have to go through payroll to pay themselves, right? So whereas with the single member LLC or a multiple member LLC, you can just take draws out of the company bank account as you see fit, whatever is agreed to by the partners, and you don't have to go through any formal payroll system. An S corporation, the partners are the partners or the shareholders that actually work for the corporation and do the work have to be paid through payroll, right? So that means that you have to get a W-2, you have to have let's say a paycheck issued either through direct deposit or physically given to the employee or the shareholder every 2 weeks. Then you also have to file the employment tax returns, such as the 940s, 941s. So you can see where an S corporation does add a lot of complexity in that regard. So you got to be a little bit careful about that.
So like as an LLC partnership, if I'm drawing pay, I don't have to go through payroll, but it's still taxable, right?
Absolutely. It is 100% taxable, yes.
So what if what's the
Profit.
drawback of going through payroll is you're paying taxes you don't need to?
The drawback of going through payroll is that you don't want to do payroll yourself, right? Payroll is a pretty complicated system of like.
Well, I mean, like say you're using QuickBooks payroll,
Sure.
You don't want to, as an owner of LLC, you don't want to pay yourself through QuickBooks payroll.
You can certainly, absolutely. So that I always advocate whatever works for the customer or client. So if that's a system that they can deal with and they can use, and it just automatically, and they're confident that the regulatory burden on them is met by that software, then sure, absolutely, that would be a good.
I'm asking, because you're saying as an owner you can just draw money out, but you're only paying what, income tax on it, federal income tax?
No. So partners in, let's say, an LLC, right, a multi-member LLC, they can just take draws without any sort of formality associated with that, and they don't have to have a W-2 or a 1099 or anything like that. That money is then subject to the income tax and then Social Security and Medicare tax. Right?
Okay, so it is subject to it.
Yes, it's subject to
because we're using payroll for ours, so I was kind of personally like, wait a minute, do I need to do that?
Sure. Yeah,
okay.
So the benefit, I will say this though, the benefit of an S corporation though is that for the shareholders, right, which most of the time the people that work in the company are shareholders, right, if they're part of the people that founded the company, they can get what's called a K1 distribution, which is essentially the equivalent of like a dividend. and that dividend is only subject to income tax, right? So that's the benefit of an S corporation. Whereas if you have an LLC, there is no way, unless it's classified as an S corporation. Again, I'm kind of digressing here, but you're subject on the entire profit of an LLC to income tax, and then Social Security and Medicare as well, right? Up to the maximum with Social Security, and then with Medicare there is no maximum.
Real quick, I want to catch up. Manuel, when I'm charging a customer, do I include the taxes in the total invoice? Yes. So, like, I'll tell a customer your price is $600, and then the tax is like $649.50, or the total is like $649.50.
Sure.
And, I mean, like 1 out of 50 customers is like, oh, what's this tax? I'm like, it's called Texas, bro. Like, do you like our road system? You know, like, absolutely. Do you like the DMV? You like registering your car at HEB? It's called taxes.
Yeah, I know. It's a lot of times it's because people don't consider services to be subject to sales tax, but they absolutely are most of the time. There's only certain ones that are exempt.
Johnny Lee, I stepped away. Do you charge the customer sales tax? Yes, Johnny, I do. Bradley says, I want to know how this works with a CPA. So you started LLC, been keeping track of everything on my own. I'm really small, doing any CPA yet. I mean,
well, you might. I mean, again, the fundamentals, it depends on the company structure, right? So if he has an S corporation, I would say probably. If he just has a sole proprietorship or a single member LLC, he might not, because there would be there's no differentiation between an individual return for like an individual federal income tax return as compared to, like, let's say the company return. They're merged essentially. So he would still just have a 1040, a Schedule C, and a Schedule SE. That's if he's a sole proprietorship or he's a sole member LLC. So he might not, if he's comfortable dealing with those like tax forms. If he's ever, let's say, worked for himself, then his return would almost be identical, right, to what he's done previously. If he's uncomfortable in any capacity, I would say, seek out help from, a CPA or tax attorney or enrolled agent. But I would say this: understand when you have a simpler tax return, and then look for what you would consider to be a pretty good deal. So if somebody's trying to charge you, $900 or $1,200 for a single member LLC tax return, I can tell you right now that you're being ripped off, right? I mean, that's not an appropriate price. So that would be the main thing I would say, is shop around if you're uncomfortable doing your own taxes. But a single member LLC, right, let's just say hypothetically that's what he is not the most complicated tax structure, and so therefore he should look for a pretty good deal.
So last question before we're caught up is, can I pay out quarterly, yearly K1 contributions on an LLC instead of payroll for partners, silent partners, not working employees?
Yes, you can make those, you can pay out those K1 distributions in any way you want, right? It just, what matters is that you account for the total amounts at the end of the year, right? It's just kind of like if you were to pay, like, let's say a contractor in increments of, let's say, $1,000 a month. The important thing would be that you had sent in a 1099 to the IRS to account for all $12,000. Whereas if you had paid somebody, you paid that same contractor $12,000 on the last day of the year, there would be no difference, as long as, again, you had submitted a 1099 for the full amount. So you can structure the payments however you want, as long as they're accounted for properly.
Oh, come on, computer. Wow. That'd be super helpful.
But a big one for the company, for forming a company, is the legal structure of the company. So that's something that you should be a little bit concerned about. So the two biggest ones are LLCs, or limited liability companies, and then S corporations. Those are the two biggest ones. And just understand that S corporations are quite a bit more complicated in terms of their tax structure than LLCs, but not so prohibitively complicated that I just completely don't recommend them. It's just that people just should understand kind of what they're getting into.
Makes sense. Let's see. Okay. And then, so just to help people, like you were talking about the, like part of, you were saying, well, what time is it? 6:25. So in like a few minutes, we can give out your number for people to text.
Yeah, absolutely.
But you were saying, like, you specifically mentioned like these 3 returns is what you'll be helping people with when you want to talk about those.
Yeah. So the three biggest, like, let's just say, well, I would say the three biggest forms I deal with are 1040s, 1065s, and 1120s, right? So a 1040 is just the personal income tax return, and that also, that applies for all individuals, but it also applies for sole single member LLCs, and that also includes married couples who are each, let's say, a member in an LLC. Those generally are combined in just a regular individual 1040. 1065s are Form 1065 pertains to partnerships, both general partnerships, which are formed without any sort of liability protection, but also to multiple member limited liability companies, right, that are not S corporations. So those are the quickest way to remember it is just multiple member LLCs are just classified as partnerships for federal income tax purposes, and then the main tax form for partnerships is Form 1065. So I deal with that all the time. And then finally, Form 1120S, that's another big one, and that is the tax form for S corporations. So an S corporation can either be formed on its own, just as just an S corporation through the state of Texas, or you can classify yourself for tax purposes as an S corporation if you formed a multiple member LLC, let's say, and you just want to be taxed as an S corporation. You can make that election, and then both of those scenarios, in both those previous scenarios that I spoke about, you would file a Form 1120S. So those are the three big ones that I deal with when it comes to business taxes. Again, those are 1040, 1065, and 1120S, and I deal with those all the time.
Nice. All right, what's next on the list? All right, since I'm a one-man band with an LLC, would it be worth going small business QuickBook route or to hire someone like you? Well,
well, again, that's sort of a matter of how comfortable you are with the forms. But I'll say this: that the four biggest forms for a single member LLC, again, I don't hide the ball, so I'll just explain this, would be a 1040, and then a Schedule C, a Schedule SE, and then a 4562. And Form 4562 is the form that you use to depreciate capital or equipment that you've purchased throughout the year. And since you're in a business that's very equipment heavy, you'd have some things to depreciate most likely yearly. So again, that's Form 1040, which is just the main federal form. Schedule C, which is where you account for your profit on your business. Schedule SE, which is where you account for your self-employment tax, and that tax is Social Security and Medicare. And then Form 4562, which is the form used for depreciation. Now, there are other forms as well, potentially, but those are the four big main forms. And so if you're comfortable with those, then I would suggest, especially if you have very rock solid bookkeeping, then, accounting for profit associated with taxes is the main thing you'd be concerned about, and that's just revenue minus expenses. So again, if you have a very, let's say, decent hold on this ideologically, there's no reason necessarily to hire an accountant or a tax attorney. But if you're shaky and you just don't want to do it yourself, then it matters how confident you are with it.
Makes sense.
Yeah.
Let's see. One more question. How would you structure it if I set up an LLC under a parent company?
Okay, so yeah, So again, unfortunately, I'll just say,
what are you doing, man? You running drugs?
I'll say it depends, right? However, if you set up an LLC under a parent company, right? So you have to think, okay, so the LLC that you set up, you have to think to yourself, well, who's going to be involved, right? So you know that let's say the parent company is going to own the LLC. But you'd also have to think about who let's say the partners associated with the original LLC is and things like that. I mean, so how would you set it up? Just the original, let's say the subsidiary is a wholly owned. Let's say the subsidiary is wholly owned by the parent. Right, and you see this all the time, right? I mean, this is like how Alphabet, I'm sure, is kind of like, in one way or another, this is how, let's say, Alphabet is structured to own Google and things like that. But there's just a lot of different ways to structure it. But LLC is, I will say this, an LLC is the most versatile let's say, form of a company that you can possibly set up, because you can hire anybody you want, you can have contractors, you can formally employ yourself, let's say, or you can just take draws out of profit and things like that. So just to kind of answer the question succinctly, it would be an LLC. It could be owned, let's say, wholly owned by, let's say, another LLC or an S corporation, and that would be generally the way that it would look, right?
Makes sense. Next question. It's always interesting because like I don't have, like these questions are coming from guys in the industry, and I'm just like, wow, what do you have to talk about?
Yeah.
How to transition from an LLC to an Inc. and what are the pros and cons?
Okay, so if you're talking about transitioning just for tax purposes, which is kind of what I'm assuming, because there's no benefit for actually, let's say, changing your structure per se. There could potentially be the only reason you would actually change the literal structure from an LLC to a corporation is because you would want literal shareholders, right? Instead of just what's called members. Members are in an LLC and shareholders are in a corporation. Now, you can also just cut up the owner, like let's say the ownership percentages in an LLC, and it functions essentially as shareholders, right? As shares. They're not called shares, they're just membership units, let's say. So you probably wouldn't literally change your structure from an LLC to a corporate structure, but you would. But what he's probably talking about, I'm assuming that the asker of the question is more or less asking what are the pros and cons of, let's say, changing your tax status from an LLC to an S corporation. And the benefit is that you can for the shareholders in an S corporation, you can, let's say, designate a certain amount to K1s, and those K1 amounts are not subject to Social Security or Medicare taxes. They're only subject to income taxes, whereas all of the profits, let's say, associated with an LLC membership are subject, let's say theoretically, they're subject to Social Security and Medicare, subject to the Social Security limit, and then Medicare has no limit. But what I'll say though is that you can't just designate, let's say, 90% of your profits to the K1 in an S corporation, right? It has to be proportionate. It really can't be more than, let's say, 30% of the profits associated with like, let's say, the total S corporation profits. Otherwise, the IRS will come back and they'll say, look, somebody worked this company, right? We're gonna now designate this overage that you've just said is, like, let's just say these K1 distributions. We're gonna designate that as like, let's say, wages, right? Wages and salary, which should have been designated like that originally.
Makes sense.
Now that could change if you had a lot of silent, let's say, shareholders that didn't work for the company, right? You could designate the vast majority, let's say, of profits to those silent shareholders that, again, that didn't do any of the actual labor, and you could pay yourself a salary that'd be much lower. But that's not generally the case with S corporations. S corporations, generally speaking, have like 2 or 3, let's say, shareholders. They're all active and working in the company. Under those circumstances, you couldn't designate, let's say, more than 30% to that K1 distribution, right? So that kind of got a little bit technical, but you can just kind of see.
No, it's good. I mean, the nice thing is like I said, I will download this and then put it on YouTube, and then guys can watch it at their own speed. So if they don't understand something, they can go back.
Yeah, and
Dave,
when
you don't have to apologize for asking questions, man. That's why we're doing this interview.
Yeah.
Like, I'm just facilitating it. Like I learn something every time I do an interview, which is great for me, because like I'm always trying to learn, and the more tidbits I pick up, because I will say, thank God, in our industry, guys don't really try and give tax advice. It's just like the norm, and they're like, ask an expert. It's like, we're not a painter group, we're not a tax group, we're pressure washers. So most guys are just like, hey, go find.
Well, I actually don't mind going over this in greater detail if any listener, let's say, wants to contact me directly and just ask me, because I go over, this is the main question really people have, is the structure of their company and what are the benefits of it.
Right. Well, so James Madison, dude, I mean, you're doing a DBA, you can still convert to an LLC. It's not like a big deal to change,
Yeah, a DBA is just a sole proprietorship. right? Most of the time, when people say, I just have a DBA, that's a sole proprietorship. That means that there's no formal, let's say, incorporation, to use that word colloquially. So then there would be no issue with forming an LLC or transferring those assets, let's say, to a corporation that you had created. You want to be careful changing company structures, though, once you already have a company, because it could cause a taxable event associated with certain assets, and you might have to value things. So you want to be careful about that. You want to probably start the company in the way that you really want it to continue into the future. That's why I would say this is one of the main things you want to be concerned about, is the structure of the company.
So 2 questions real quick. Matthew D. Domenico is asking, what is a K1?
A K1 is essentially a distribution of profits that is above and beyond, let's say, let's just say above labor costs, right? So you're going to have labor costs associated with, let's just say, and this is for an S corporation, by the way. You're going to have, let's say, you're going to have revenue, and then you're going to have expenses, and then there's going to be an amount left over that's profit, let's say. And a lot of that profit is going to go to, let's say, pay people's salaries in the S corporation. But there's going to be a certain amount that's left over even after that. And I know I'm kind of, this is just kind of the easiest way to sort of visualize this. There's going to be a certain amount of money that's left over even after paying everybody's salaries. Let's say that's $10,000, and let's say you have two shareholders, right? Well, that money it's not salary, right? It's not wages. So it has to go to somebody, and it's going to go to, let's say those 2 shareholders own the shares in equal proportion, 50-50. Well, then $5,000 would go to one shareholder, and then $5,000 would go to the other. And the way you account for that amount of money to the IRS is in the form of a K1. So it's basically like the profits of an S corporation accounted for using a K1, which in this case, a K1 is just, let's just say, for reporting purposes to the IRS, it's similar to a W-2 or a 1099. It reports in this instance, it reports the amount of profit that the S corporation has after it's, let's say, paid all the salary to whoever actually works, right, in the company. And I know that's not the most technically correct definition of what a K1 is, but it's the easiest to sort of visualize. Now, for a partnership, really quickly, a partnership, if it doesn't have, let's say, salary, because it doesn't necessarily have to pay wages or salary to anyone, a K1 is just a way to distribute to the partners all the profit that a partnership makes, right? So it's a little bit different than an S corporation in that the partners that work in a partnership that's not an S corporation, they don't have to draw a salary, they don't have to draw a wage. It's not a legal requirement. So they can just be paid, let's say, with a K1 at the end of the year. Let's say there's $100,000 that's left over after expenses are paid, for let's say the partnership. And let's say there's 3 partners and they're all equal partners. Well, then each partner would get a K1 for $33,000, let's say, roughly.
Makes sense.
So, yeah.
So before we've been going a while. So real quick, you want to give everybody the number to text you for the first 4 people?
Yes, that's right. So I'm offering for the first 4 people that text me the word Dino, so D-I-N-O, and the reason is because my company it's kitschy, but it's called Dino Tax Co. So the first 4 people that text me Dino, D-I-N-O, it can be all caps, all lowercase, a combination of those 2, text it to 713-397-4678. So again, that number is 713-397-4678. So the first 4 people to text Dino, I'll prepare their business taxes for the tax year 2021 for free. So that's the giveaway. So that doesn't include a personal return, but let's say that you had a single member LLC, then your business return would be combined into your personal return. So I prepare that. So it's just the business return. So if that's a 1040, a 1065, or an 1120, then I'll accommodate the first 4 people that text that word Dino. And I'll also prove to whoever the 5th person and each subsequent person after that, I'll send you a screenshot that unfortunately you didn't get it within the first 4. But if you need that.
Yeah, I appreciate it. So does the IRS frown upon making a company as a bank? whereas the company only invests in new companies. Let the companies pay their taxes, but profits get paid to the company that invested, trying to avoid double taxes.
Double taxes are well. Double taxation is only prevalent in C corporations, right? Because unless the company itself is taxed, then it's a pass through, which just means that like one company is just essentially passes all profits through, let's say, to its members or shareholders. So double taxation is not generally an issue. The government, honestly, the IRS doesn't care at all how complicated you make your company, as long as you don't create things like companies that sell losses, to like investors and things like that. They frown on that because that's like essentially, that those are like kind of tax havens and things like that, So they don't want you creating one of those. But if it's a legitimate company, I mean, you can have a parent company that just sits there and just collects from all the subsidiary companies. The IRS doesn't care at all unless you don't account for the profit that's made. And again, double taxation is generally not an issue unless you set up a C corporation, because for a C corporation, C corporations are taxed at the entity level, and then the shareholders themselves are also taxed at the personal level. So that's double taxation. But you don't have to worry about double taxation with sole proprietorships, LLCs, or S corporations. So any combination of those, you're not going to encounter double taxation. And again, the IRS doesn't care really what the structure of your company is, as long as you don't sell things like losses. But most people don't do that. So
makes sense. All right, I think we're caught up on the questions.
Okay, great, wonderful.
How long we started your? Wait, if I haven't paid any taxes, oh, here we go.
Yeah.
Bang bang. Justin Hampton, congrats on the 5-star review, by the way. If I haven't paid any taxes through the year, how will anyone know how much I made throughout the year? Asking for a friend.
Yeah. Well, okay. So here's the thing, right? So if you, like, let's say if you don't draw a salary from your own company, right, you're supposed to pay quarterly. So if you're a partner in, like, let's say an LLC, right, a multiple member LLC, or you're just a sole proprietor, or you have a single member LLC, you're supposed to pay quarterly, which means you're supposed to pay on April 15th, June 15th, September 15th, and then the following year on January 15th. And you're supposed to estimate what you think your full tax liability is and divide that by 4 and then pay it on those dates, right? However, how does the IRS know how much money your business brought in? Without the presence of information returns, which are like W-2s and 1099s, being sent in from, let's say, third parties, the IRS doesn't know how much money your company makes. And the United States has what's called a voluntary tax system. It's not that you have the right to voluntarily pay taxes or not. What it simply means is that the onus is on the individual to account for his own taxes. And so that's kind of the short answer there. The onus is on you to sort of comply with the law. If you don't comply with the law, then of course there are certain things that can happen. The most likely thing is they'll do one of two things. They'll send you letters and bother you. If you still don't answer, then they could levy bank accounts, and if you still don't answer after that, they can start to garnish wages, and they can put a lien against your house. But the short answer is that if there's no 1099s or W-2s, the IRS does not know how well or poorly your company is doing. You could make $100 million, and the IRS might not know. They probably will under those circumstances, because you'll fly pretty high on people's radars. But for the average person, like, let's say, that has a small business, the IRS has very little knowledge about what's actually going on.
There you go. Let me go back to.
But I do encourage people to pay quarterly, because let's say that you had a certain amount of money that you made, and let's say you had a decent amount of money. Let's say you made $100,000 or something like that. If you don't pay quarterly, even if you have all the money at the end of the year, they can still ding you with like a $500 penalty for not paying quarterly. Even if at the end of the year you account for all of your taxes and you just send them a check for, let's say, $20,000 or $30,000, they can still say, well, and this is what the IRS likes. It's low-hanging fruit. They can still say, well, you didn't comply with the rules, and even though you paid us all you owed, we're still going to charge you a $500 penalty. And I've had clients have that happen, and they're certainly not happy about it. So I always do encourage people to pay quarterly, and then the IRS makes it extremely easy now. So you don't have to send in a paper check. You can pay through what's called IRS Direct Pay, which is just you can Google IRS Direct Pay, and then you just verify your identity and put in your bank account information, and they'll just directly debit the amount that you choose to pay. You can pay every single day if you wanted to, or you can pay quarterly, or you can pay twice a year, 10 times a year, whatever you choose. So they've made it pretty simple now.
Nice. I think. Wait. Okay. Next question. If I start buying my equipment before my LLC is finalized, can I still write off the equipment?
Yes. Right. So what I would say though is I probably wouldn't start to depreciate the equipment as much until you actually are operational. So if you don't have any profits in a year, there's no point in let's say completely depreciating the property, because you're just kind of drawing things into a negative territory. I don't ever recommend doing something like that. So sure, the short answer is that you can start to depreciate anything in the first year, and you actually have to, right? But there's amounts, there's sort of elections that you can make in terms of how quickly you depreciate things in a given year. So what I would recommend is just if you're operational, start depreciating. But it depends on how much let's say revenue and profit you bring in, really, and then that will kind of dictate potentially how quickly you want to depreciate things. There's something called Section 179. Which is an election you make, and you can fully depreciate whatever you purchased up to, let's see, the current maximum is up to $1,040,000. So that means that you can actually put into service up to $1,040,000 in equipment and depreciate it 100% in the first year. So that's very, very generous. It basically means that anything that you put into service, with the exception of like vehicles, let's say, other things too, like rental property, whatever. But with the vast majority of equipment, you can depreciate it 100% in the first year. That's a real gift in a lot of respects. But wait until you're operational to make an election like that. Otherwise, it doesn't really make any sense.
That makes sense. I follow. Let's see. Any other questions? Oh, wait, nope. Here we go.
Okay.
Is 30% too much or not enough to set aside per job if not paying cash, per se?
30% is pretty good, because if you think about it, let's say like from an individual perspective, right? And that's really what it all comes down to, is just how this affects the individual. Because at some point there's going to be shareholders or partners or whatever. Those are individual people most likely. The minimum tax rate is 10% after your, like, let's say your standard deduction. So it's at minimum 10%. And then everybody has to pay Social Security and Medicare to a degree on some of their money, right? Social Security, again, tops out at $137,000 or something. So for a significant amount of income, you're going to be paying Social Security and Medicare. And those two things, if you're self-employed, combined are 15.3%, which means very quickly the minimum you can be taxed is 25.3%, right? So therefore, 30% is just assuming that you're in a higher tax bracket, let's say, and so no, that's not too much. In fact, I would say that like for people that make, let's say, more than about $70,000 or $80,000 in, let's say, self-employment income, you want to probably put away about 30% for taxes. It sounds horrible. It is, but the way I look at it is that it's probably better to sort of err on the side of caution, and if you get a larger refund, let's say, in a given year by withholding 30%. Of let's say self-employment income, then the next year you maybe would just take it down to 25%. But the point is, you don't owe, let's say, $15,000 at the end of the year. You don't owe $5,000. You just get your refund and then adjust downward. So it's not a bad thing.
Makes sense. Say I am a startup and I don't know what to value my company, because 1 month I may make 10K and the next it's like pulling teeth to get work. Not to mention off seasons. Do you have to pay taxes on the off season, or should you value your company as less to make up for that? Well, I mean, if you're paying quarterly, you're kind of staying up to date, but feel free to field that.
Well, so each dollar that a company makes is basically taxed. You just want to assume that it's taxed at the same rate, right? I can't think of really an exception to that. So in the off season, if you make less, just have a certain percentage that, let's say, again, you withhold just as a matter of course. Put that withholding into a different bank account, and then just remit it quarterly to the IRS. You can't go wrong with a strategy like that, because as long as the money gets to the IRS, and it will, then it doesn't matter whether it's the main season or the off season. At the end of the year, you will have essentially accounted for, let's say, 30% of your profits, and then you'll have taken care of your, you'll have taken care of your tax burden, or the majority of it, right? So again, what I advocate is just take each dollar, let's say multiply it, take 30 cents off that dollar, put that amount in a separate account, and then quarterly just remit that amount to the IRS. And and it's a great way not to think about it as well. It's just as a matter of course, you just do this, and then you'll never be in tax trouble, really.
That makes sense. Sounds good. Chris, I'm dragging today, man. I don't know why. I think it's because we got soaked. Like we had a lot of rain here, and like how like when you work and you're just like drenched, it just kind of like zaps you. And the rain hit us twice. Like so, we got drenched. We had a lot of time between jobs. Came home, changed boots, changed clothes, went back out. Rain come again. I'm like, man. Why did the IRS go away with the entertainment write-off? Why do you think?
Yeah. Well, yeah.
Strippers and blow.
Yeah.
Cool in America.
Yeah.
Which is wrong, but
yeah. But they can still write off meals at 50%.
Wait, I thought the law was 100% right now. I thought the whole thing with COVID changed it.
It could be, right?
Like, we looked at it and I was like, it's 100%. Like,
yeah, it's a possibility. I mean, like, again, I don't know if that's the case. I mean, it's always been historically 50%, or if you're Department of Transportation, you can get up to 80%. The stuff for COVID has been zonky, right?
It's very nebulous, and when people have tried to find out, they're just like, eh.
Yeah, they don't do a very good job. The government doesn't do a very good job updating. It's like, so they'll proclaim like, hey, you can, like, let's say write off $300 above the line on charitable donations, so you don't have to go to Schedule A. So everybody can write off regardless if they've regardless they can write off, let's say, up to $300 in charitable donations, but they never tell you how to actually take that deduction, right? So it turns out that it's on the form 1040. It's on the first page. But again, they're not very good with some of this guidance. Now, in some respects, they are. Like, I actually find calling the IRS to be a pretty fruitful endeavor if you call them pertaining to yourself. So if you say, hey, like, I want to know what's in my file, for example, like, can we talk about it? And they'll just bring up your file and talk to you about, like, what they see as, let's say, deficiencies or things that have transpired that they've noted on, like, a line item basis. So they're pretty good there, but on other things, in terms of guidance, they're not particularly good. And one of those things is with tax law, they're not particularly good. So you have to kind of figure it out yourself.
We don't want to explain it to you. We just want your money.
That's exactly right. So they can kind of tell you what they're about to do.
It's complicated. Go figure it out.
Yeah, exactly right. Yeah.
But like, I want to know if I'm screwing up so I don't go to jail. Oh, we'll tell you if you're going to jail.
Yeah, but they won't tell you how you screw up, right? That's the thing. A lot of times they'll just tell you like, hey, you owe us this money. And if you call them and ask them about it, they're not going to be, they won't know a lot of times, right? Because it's not their job to know. It's their job to tell you what they're going to do to you. But by and large, though, the IRS is just somebody that you want to stay on the right side of. They're a lumbering beast. If you get caught up with them, they're extremely powerful, but they're very slow moving. So it's just so much easier just to comply. And that's why I just say, like, you're probably going to have to pay too much as a small business owner in the way of taxes. But it is much, much better than having compliance issues with the IRS, which can just be like night. And it's gotten worse. I'm not going to lie, in terms of the way the IRS like processes data that you send them. They're not particularly good about that. So it's best to hit the nail on the head the first time, and that's why compliance is a big thing now.
Makes sense. Does anybody have any other questions? We've been going almost an hour. Yeah. We've had some good questions, and I really appreciate your time.
Yeah, well, of course. I talk about this stuff all the time. I'll talk about it for anybody who wants to just call me and have just a question that takes a few minutes to answer. I don't charge for things like that, so I have no problem talking to people.
I appreciate that. Yeah, there's a lot of guys that they're like, I only have one question, and then they might realize I have a lot more than one question. I need help, and that's good, because it's like, that's why we tell people when you're not just a pressure washer, you're running a business, and you some people are everything. They can be the front
Sure.
office and the accountant and
Yep.
everything, but like that's not the norm, and that's
Yeah.
okay. Like that's why we went to you. Like
Sure.
I, I'm capable of figuring out our stuff. It's the time I don't have
Yeah.
because I'm
Absolutely.
focused on trying to run a business and wash and deal with customers, and that's why I went to an expert. And
Yeah.
but like I said, like you're very easy to talk to and you're very willing to break stuff down.
Sure.
Uh, what's up, Gage? So I think that there's something to be said for even if you can do your own taxes, if you get bigger than like a sole proprietor, my personal opinion is, there's a lot to be said for just having somebody help you that is an expert, you know,
Yeah.
and I don't intend to change anything even when I'm at full strength of the company, which is coming soon, because that's just one less thing that I have to worry about. Like I know that if we track everything and everything goes into QuickBooks and we give him the correct data, it's going to be fine. It's easy and I don't have to worry about it getting screwed up or somebody got swamped and forgot about it. So that's my personal take as a business owner on why I use a tax attorney is because I know that I track all my stuff. Like my Amex, my bank account, everything goes into to QuickBooks. It's all there. It's all trackable. It's fine. And then we track mileage and all that stuff, and we can ask questions about how to like to depreciate things and stuff like that. So I know like I have a resource that's not requiring me to spend hours and hours and hours and hours, and then wonder, am I even looking up the right stuff? Like, is this true? Because like the internet can be, woo.
Yeah. Sure. Exactly. Right. Yeah.
Like
I mean, also,
you pass the bar in Texas. We
yeah.
live in Texas. You
Yeah,
know.
absolutely. I mean, and so I'll say this too. I mean, I guarantee my work. So mistakes happen. Everybody makes mistakes. And if somebody got a letter due to a mistake I made, I would fix it. I mean, it's
Yeah.
just that's the long and the short of it. And I would probably, like you said, I probably would know a more expedient route to get to that solution than maybe if somebody had done their own thing. But I mean, I always say this too. I always kind of use this analogy. It's like mowing your lawn, right? Like you can mow your lawn, or you can hire somebody else to mow your lawn. Once you have a 5-acre lawn, though, right? You're probably not gonna maybe tend your own grounds as
Unless you're retired, that's what you do.
that's right, right? Unless
Daniel
that's
L.
what you
Gross
love to do,
says
right?
everyone should use a CPA. If you expect people to use your professional services, then you should use one too. I mean, that's Daniel. I agree with you. Like first off, you want everybody to support your business. It does help to support others, but it's also just it's a good way to like insulate yourself from mistakes, especially if taxes are confusing or you don't have the bandwidth to do it. There's a lot of reasons, but any idea what the federal rate will be per mile for 2022?
For 2022, I'm assuming that what the asker means is probably for tax year 2021, which will be due in 2022.
Hmm.
It's not going to be less. It's not going to be less than 53 cents a mile. I don't think. It's always been pretty the per mile rate, which you get as an LLC, um, is it's generous because they don't. It's to compensate for depreciation and the cost of fuel. But it's not going to be less than 53 cents, I don't think.
So, let's see real quick. Last question. If you have an LLC and you want to open up a different division, would it be smart to open up a different company for liability reasons?
Yes. Okay. So this is that's a good question. I would say that you don't ever want. This is just my personal opinion as an attorney, but you don't ever want one company to hold a lot of, let's say, cash or equipment, things of great value. Because if somebody sues, like let's say the division of your like company that's not like let's say not protected from doesn't protect, let's say, the parent company from liability, then they have access to all that money in all those bank accounts, all the equipment, you know. So never put all your eggs in one basket. So it is very smart to create another LLC. If it's a subsidiary, and then just make sure that your new, like let's say that each customer that deals with that subsidiary as much as possible, signs a contract acknowledging that they're dealing with the subsidiary, because it's a firewall of liability at that point. And it's best practices. It's just sort of like if you own more than one rental home, this is probably the best example. You would never want to put 3 rental homes in one LLC, because then one tenant who's disgruntled that sues you has potentially access to all the value of all 3 of those rental homes. You'd want an LLC created for each rental home, right? So in that same respect, you'd want a new LLC for each company that owned, let's say, that was going to be doing something significant and had, like, let's say, a significant amount of business.
Makes sense. So one question, it was already answered by somebody else, but like, say we have a big convention in Atlanta. Now, could that be written off because of hotel, gas, blah,
Yeah,
blah?
absolutely, right?
It's a business travel.
Absolutely. All conventions really, unless they're so spurious and they have nothing to do with it, but of course that's not what we're talking about. All conventions are kind of like continuing education, right? So they further sort of your understanding of your own enterprise or business. Those are all 100% deductible. And again, unless they just venture into things that are just so frivolous, but that doesn't happen. So yeah.
All of our conventions are like vendors, focused speakers talking about our industry. Like it would be easily provable, so that you don't have to worry about that.
Absolutely. It'd be like saying if you made a fun commercial, right? Would that be deductible? Well, let's say it costs $50,000 to make a fun commercial for TV or something like that. You wouldn't say, well, we had a great time making this commercial or something like that, so it's not deductible. No. It's 100% deductible. You can have fun, let's say, going to a convention. You can enjoy what you do. Nobody says you can't enjoy your job. These are all deductible business expenses.
Hey, Diego, I'm doing well. What was the dates for the convention again? Justin, you have tickets. Am I going to load this on YouTube? Yes, I will. I'm just going to download it and post it. I'm running behind. I've got a whole bunch of interviews that I got to do from the past. The convention, Justin, the meet and greet is August 18th. The actual convention is August 19th and 20th. It's Thursday and Friday. It's in Atlanta. And if you Google hugeconvention.com, it should come up with all the details. I think here's a good suggestion that was made by Daniel. When you purchase a building, create another LLC and rent it to your company. Yeah. Would you say that makes sense?
Yeah. You could do that. Again, when you create a new LLC, what you're really doing is you're kind of dividing up liability. So you're creating liability firewalls so that the liability stops where one company ends and the other begins. If you lease, let's say, a building, if they're 2 taxable entities, right, what ends up happening is that the money that one takes in as a result of rent, right, is chargeable as a taxable expense, but then for the other company that's paying it, it's a deductible expense. So it's a wash. The real reason to create, different LLCs is if you want to protect different assets from being potentially seized, let's say, or subject to a lawsuit. That's really the main reason that you would do something like that.
Makes sense. All right, last question. Anybody have one last question? I swear to God, Xavier, it better not be you. He's already one question past last question. I'm just kidding, Xavier. If you have another question, it's fine. Wednesday, though, you're buying me a drink if you ask another question. Let's see. Also for insurance. All right. I don't think we have any more. All right. It's finally nice to talk to you, face to face. I know that we've only texted. I just want to say again, I appreciate you taking the time to do this.
Oh, of course. Absolutely. It's my pleasure. So if people want to go to my website, can I tell them what it is?
Yeah, I posted your website.
Oh, good.
So what I'll do is when we're done with this live will stay up. I will add your website link to this so they see it. But when I posted the video, like 2 weeks ago or whenever we agreed to it, that day I went to your website, read it all because I hadn't actually ever looked at it, and then posted it. And so 36,000 member group, 2 groups, 36,000 members total have seen it. And lots of people are asking questions like,
Yeah, that's
you know, like,
heavy. Yeah, it's funny. I chose the name Dino Taxco just because I thought, well, I can choose whatever name I want, right? But I will say, like, I have the credentials to, you know, and I have the experience to really do the taxes. It's a funny name, Dino Taxco, but you know, I am a lawyer, but it's just funny.
Your in my phone is Dino Tax. So
yeah, exactly right. Yeah, right, like it's
yeah,
crazy.
I went to your website. I was like, oh, this is his name.
Yeah, right. Yeah, people have. They said, can I speak to you?
And that's one thing for guys that are specifically looking to go with Dynotax is he will text you, he can email you. It's very easy. We did everything completely remotely. Now, I mean, like, you have to have your stuff in line for him. Speaking of which, I got to file this quarter's taxes. I got the emails saying, remind me.
Sure.
But very painless process, especially for you guys that are super busy. I really enjoy the fact that I know if I need him, he's going to be responsive. And
sure.
I also appreciate the fact that I don't have to allocate time out of my day to physically go in, you know.
Yeah.
Now, do you cover Alabama?
Sure, I would. I'll always be honest too. If there's something I can't do, I'll be perfectly forthright with you. I mean, I probably could. I know that I would handle, let's say, federal tax filings, but you know, frankly, I don't do bookkeeping. And with payroll, I always recommend that people either use like their own software or go with, like, let's say, a third-party company like ADP or like Wells Fargo, because payroll is really is really another thing. So there are certain things I don't do, but I'll always tell you very quickly if I don't do them. I'm never going to just say, hey, let me just throw spaghetti at a wall, right?
Yeah,
and just use it as an experiment or something like that. But for federal tax filings, and then state income taxes are straightforward. They parallel the federal structure pretty well. So I would handle
Dino insurance, Dino payroll. There you go. Time to branch out.
Payroll is a different thing. It's a different animal. You know, just like bookkeeping is, right? Bookkeeping is a totally different thing. I don't do bookkeeping. I mainly just say if you have a simple enough company, you can certainly do the bookkeeping. It's as simple as Excel for debits and credits and just a description of the money coming in and going out. If you have a lot of different like, let's just say, inputs, then, you know, maybe you might want to think about hiring a third-party company to do bookkeeping, but I don't do it. But again, I'll always be honest and just tell people what I do and don't do.
I appreciate it, and I appreciate your time, and I appreciate you trying to break this down to an easily digestible level, because, like, you know, obviously with your level of schooling and experience, you could go all over everybody's heads, and I appreciate that it was very easy to understand.
You're welcome. It's never I absolutely never intend to ever get so complicated on purpose as to obscure what I'm actually trying to do. So if people want me to break things down to just the most simple level, I always try to do that. But if they have any simpler questions, like if they don't understand something, I don't mind answering those either. Because I mean, I know for me, I mean, I don't understand most things, right? And when I'm asking questions, I would like people just to tell me in the most simple way, right? And I try to also give examples of things so that people can grasp things better. But I never try to hide the ball ever.
Yeah, no, and like I said, I talked to you, you know, directly. I was like, look, you know, I'm not going to interview somebody that I haven't dealt with or like seen their work or use their product or stuff like that, and like, you know. 2020's in the books, and I'm not in jail, so we're
yeah, you're fine. And hey, if you get a letter, right?
I think I got another letter about that stupid 941 again.
You got a letter?
I don't know. I looked at it the other day, and I feel like it was the same one. It was like, we received a form 941. Our records indicate you have a form 944. Yeah, so there's still. I got another letter about the 944, but they may. I don't know why.
Well, send it to me. Let me look at it.
Yeah.
Again, send it to me. I'll handle it for free, type of a thing.
Well, this is the thing you already sent them.
Yeah, if sometimes things require just a phone call to the IRS, because again, I'm not going to hide the ball. If you call the IRS, sometimes if you don't know what they're talking about, and we all fall victim to this with the IRS, you just have to ask them. You'd say, well, what do you want me to do? How do I fix this? Right? Like, that's really the question you ask them, and they'll tell you. They'll say, you do this, this, and this, right? So that's what it takes sometimes, because sometimes they're not good at telling you necessarily what to do, but sometimes they are. Just depends.
Yeah, I'll get you a copy of this so you
Yeah.
can see, because this is the one that I don't know if I sent it before. I think I just talked to you about it, and it was like the 944. But anyway, I really appreciate it, and I look forward to continuing to deal with you. And if anybody has any questions, let me know. Have you gotten text yet?
Oh yeah. Let me see. Let me check.
Like, we usually always announce, like, okay, he's gotten text.
Oh
Like,
yeah. Oh yeah. No, I got some. Yeah.
Oh yeah.
Yeah, I did. So like, yeah, I'll be responsible.
So at least 4 people texted.
I'll tell everybody who's in the top 4, and then unfortunately I'll tell people who aren't. But
hey, well, I'm glad that guys texted you to take advantage of it.
Sure.
I know there's a lot of Houston washers. I mean, I know a lot of them. It's great. I love this community. Sure. I love the guys local. I need to actually start inviting you guys. What I want to do is we didn't do it in June because I was too busy, but we do monthly networking lunches. So we're doing one on Sunday, July 18th at the Mr. Gaddy's down on Uvalde. I'm trying to kind of ring Houston to make it fair. So we started, the first one was in Kingwood, then we did one like kind of like North Houston. Now we're doing East Houston. The next one will be South. But we're doing networking lunches. So I need to start getting guys outside of our industry to come to these lunches because it's great to network, period. So I'll send you the details for that. You make it. It's always like our events, though. They're like food, wife, kids, welcome. Like it's
that sounds nice.
It's just like an easy, come if you can make it. And
that does sound nice. Thank you. I'll be there.
Yeah, I'll send you the details for that. But like, we try and do it once a month, and it lets us get to know each other in the industry. But I need to start branching out and inviting, is there, local insurance rep that wants to come or some things like that? Because like you just never know.
Sure.
My insurance rep's in Florida, so he needs to take a business trip right off to come to one of these networking lunches.
Yeah. No, I understand.
But we do get guys. The last one we had, a couple came down and rented a hotel just to come to the networking lunch, and I had friends from Kentucky fly in, washers, to come. I'm like, okay, it's just a lunch. Like, we could have hung out.
Yeah.
But anyway, I'll give you the info for that. I really appreciate everybody jumping on here.
Well, thank you.
I'll put this on YouTube, and I have to share it to the big group because, like I said, I didn't get that BeLive software set up where I can stream to both groups.
Yeah.
But I'll post this interview on the other group.
Sure.
And I'll be in touch. I'll send you this letter.
Yeah, send me the letter. Send it on over.
Lovely letter. You know what I thought when I read this? I was like, I need to text Dino Tax.
Yeah. always open. Always available.
I read the first line. I was like, I just got to text him.
Yeah, just text me. Yeah.
I appreciate it. All right, brother. You have a good night.
Thank you, Heath. I appreciate it. Bye.